Well, why do those laws exist? Well, they exist so that the Sam-Bankman-Frieds of the world can't print their own token, do insider wash trading, manipulate the price up to $8 billion, and then tank it to zero overnight. That's why the laws exist. He could have never operated the exchange. Alameda would be out of business, FTX would be out of business, and the FTT token would be out of business if they had actually had to file a registration statement with the SEC.
Saylor, the chairman of business intelligence software company MicroStrategy, has bought more than 100,000 Bitcoin that today are worth billions, and he doesn't show any signs of slowing his buying binge anytime soon. Billionaire tech executive Michael Saylor says the downfall of FTX exposed problems with crypto exchanges and will likely drive more investors to Bitcoin. Saylor pointed out that FTX created tokens such as FTT and Serum and promoted others, then allegedly transferred them to Alameda, the hedge fund of FTX founder and CEO Sam-Bankman-Fried. At that point, Saylor said, since the supply was largely in friendly hands, they were able to manipulate the price of those tokens up through insider wash trading. Through his statement, Saylor was hinting at the fact that SBF was not an honest CEO and that he mishandled customer funds by moving them between Alameda and FTX. Saylor remains a significant proponent of Bitcoin and argues the disastrous situation with FTX will lead other investors to gravitate toward the digital currency. So before listening to Saylor's interview, don't forget to hit the like button and subscribe to our channel.
There is a stigma attached to related party transactions in public companies. Rightfully so, because Alameda was a related party to FTX, and FTT was a related party. So Sam Bankman-Fried is the issuer of FTT, is the owner of Alameda, a hedge fund, and is the operator and owner of FTX. Those were three related parties. The reason that there's a stigma is if you took FTX public and you said, by the way, FTX accepts FTT, which is a related party issued token, and it does business with Alameda, the question that a skeptical investor would have is, well, since the same person controls all three, is it possible that he actually wired the systems to give himself an advantage? And if it turns out that Alameda has $1 billion trading loss, will Sam Bankman-Fried, the CEO of FTX, liquidate Alameda in order to protect the interest of the other customers? Or will Sam not liquidate them to protect his own interest? He has a conflict of interest. Mm-hmm. And we know how the story ends. By the way, the other question would be, since Sam has billions of dollars, $8 billion worth of FTT token, will Sam, the CEO of a bank, issue credit against the $8 billion of the token that he issued himself and give himself preferential treatment? Or will there be an arm's length transaction? So here's an interesting question, Daniel. If you were an arm's length, if this was an arm's length relationship and there was a disinterested financial executive running FTX, how much credit do you think they would have extended Alameda for $8 billion of FTT token?
Nowhere near what they did.
Yeah, we know they gave them billions and billions of dollars of credit, right?
In recent interview, Saylor was asked that how much did he get as bona fide MicroStrategy CEO when he was in the market trying to raise cash.
Was honest and competent, would have lent Alameda somewhere between $0 and $10 million.
Right.
Like the number is not one order of magnitude less. It's not even two orders of magnitude less, right? It's somewhere in the range of 3 orders of magnitude less if you were honest and competent. Obviously, that didn't happen. The reason it didn't happen is because you had 3 related parties all terminating with one boss, and the one boss was not honest, not competent, and not disinterested, right? Mm-hmm. A biased, dishonest, incompetent person. Okay, what could go wrong? Well, when you have 3 related parties and a biased, incompetent, dishonest person, what can go wrong is the entire thing gets burned to zero. And is that likely? Yes, highly likely. It's not even just what could go wrong. It's highly likely. That's the reason there's a stigma attached to related party transactions. You would never want the CEO of a bank to be issuing loans to a private company that they owned, right? I mean, like if it turned out that the CEO of JP Morgan was issuing billion-dollar loans to, to Jamie Dimon, real estate development company, jointly owned with him and his wife, right? People would just lose it, right?
Yep.
For obvious reasons.
According to Saylor, regulators are likely to crack down on the crypto sector by opting to ban any innovations, a scenario he suggested would benefit assets like Bitcoin. He stated that Bitcoin, as the apex cryptocurrency, is the ultimate store of value likely to gain in the existence of effective regulations, while suggesting that jurisdictions can also opt to be progressive in crypto laws. At the same time, Saylor noted that regulators could adopt a progressive approach by providing clarity in the sector. For instance, he pointed out that clarity can be beneficial by offering guidance on registering crypto products to avoid the FTX exchange fate. According to him, regulators will either move much more aggressively in a fairly regressive conservative approach, and that means they will just shut down all the other crypto innovations, in which case Bitcoin will still be a beneficiary because in a conservative world, Bitcoin is the apex crypto property and people will simply hold it as a long-term store of value.
It seems like they just don't really want to, they don't feel that they have the authority to regulate offshore entities, right? I mean, that's been the big
Right.
blind spot.
Because he had it all registered in the Bahamas.
Right. I mean, FTX was in the Bahamas. And so there's this vacuum of power, right? What a blind spot where the US regulators don't feel like they have authority to regulate offshore entities. And the action they've taken has been via civil enforcement actions, which are very slow and very expensive, like take years and years and years. And so they have pursued a number of entities via civil enforcement slowly, but they haven't really they haven't laid out any global framework for digital assets, and they haven't pursued offshore entities. They haven't even really pursued onshore entities that aggressively. So there's been a lack of effective enforcement, I think you could say, and a question about who should take leadership of it. But Congress has been mired. They haven't passed a law. They couldn't pass a stable coin law. They haven't passed it. There is no law or clarity with regard to how do you register a digital commodity? How do you register a digital security? How do you register a digital currency? How do you register a digital token?
The focus of Michael Saylor for 2023 is to find ways to educate more people on Bitcoin and to find ways to acquire more Bitcoin. What are your opinions in this regard? Do tell us in the comment section below and give this video a big thumb up and subscribe to our channel for more interesting information. Thanks for watching.